So today I'm going to cover up trend lines and bull and bear channels. These are new terminologies that we are covering up. I know I've already covered this with Cosmos. So for Cosmos, it's more of like a revision because I need the new guys to understand this topic here. Yes, Paula, I can see you. I can hear you. Right. So for Cosmos, it's more of like a revision, but for the other guys, we haven't covered this. This is like a continuation from last week's engulfing, bullish, and bearish candles. So we are going to talk of trend lines, bull and bear channels, bullish and bearish reversals. Right. Right. So what is a trend line? Right. A trend lines is a form of support and resistance. Remember, under normal circumstance, most of you know that support and resistance is two horizontal lines, one at the top, one at the bottom. The one at the bottom is the support, the one at the top is the resistance, right? But now when it comes to trend lines, they are like the opposite. They are not horizontal, they are not vertical, but they are slanting. You can see from the chart. Let me highlight here. Where's my pen? Right. You can see the bearish trend line. We are on the first chart, the one to your right.
Left.
A bearish trend line, it's a line that's slanting from the top all the way to the bottom. That means prices or market is in a bearish momentum. Prices are moving to the downside. So price is forming higher lows, higher lows, higher lows, lower lows, lower lows, lower lows. So the points at which the higher lows connect, that's where you draw your trend line. Yeah, which in this case is a bearish trend line. The opposite applies for a bullish trend line. It means market is in an uptrend.
It's moving up.
Yes, meaning that we've got higher highs, higher low, higher highs, higher low. So at the point where the higher lows meet, when you draw the line, that's where the trend line ends. So it's a trend line support. So we've got a trend line support, and then we've got a trend line resistance. Okay. Yeah, a trend line resistance is in a bearish market. Trend line support is in a bullish market. You see? So it's of importance that you at least know how to draw a trend line. I'm gonna show you on the charts like how to draw the trend line on a live chart. This is just a theory illustration so that you get to see how trend lines look like in theory. Because obviously on a price chart, they're not that perfect. They're not that perfect. Because price is random. Okay. Yeah. Right. So let's go to the next chapter. Right. So in this section, I'm going to show you how to draw bull and bear channels, popularly known as flags. Some people, they refer to them as flags. This section of the course will teach you how to master them. Yeah. I'm going to send you these notes, guys, so you don't have to like jot it down. You're going to receive the PDF of it. So in this section, you master how to draw the trend line using how to trade how to master the art of trading using the channels effectively in conjunction with supply and demand. A channel, take note of this, a channel is only of any use if it ends at an important area of trade, such as a supply or a demand zone, preferably a strong demand or a strong supply. That's when you consider trading a channel. You see, a channel now is formed between two trend lines. You see, if market is moving upwards, you've got the trend line support and you've got a trend line resistance. Let me go back to the previous chart so that you can see what I mean. Right. You see, we've got a bullish trend line, this one here, right?
Yes.
But you can also see that there's these highs here. So these highs, they can be connected with a line. So this part now in between, that's the channel.
Oh.
You see? Now, the same applies with the bearish trend line. The moment we connect the lower lows, this part in between is now the channel. You see? So we'll be saying, no, price is moving in a channel. When price is moving in a channel, you wait for the breakout of that channel for you to be able to trade. You see? So a channel is a combination of a trend line support, which is the lower line, and the trend line resistance, which is the upper line. Yeah. So that's a channel. So let me go to the where we were. Right, we were here. Let me remove these guys there. Don't get confused now. Right. So a channel is only of any use if it terminates at an important area to trade, such as a supply or a demand zone or a support and resistance. That's when you consider trading a channel. Because when price is in a channel, it's in a no man's land. You don't trade in a channel because you don't know where price is going to break out to. But when it breaks out of a channel, then you know the direction which the market is going to take. Right. Let's go to a bear channel. Right. This is a clear presentation of a illustration of a bear channel. You see, we've got these two dotted lines. You see the two dotted lines? Those are our trend lines.
Okay.
Those are the trend lines. We've got the upper trend line, which in this case we call trend line resistance. We've got the lower trend line, in this case, trend line support. So price will be moving in an uptrend in the channel. The moment it breaks the lower trend line support, that's when you look to sell.
Okay.
Because it means the support of the trend line has been broken. Market is now pushing the downside.
Downside is.
Yeah, that's in a bear flag, or you can call it a bearish flag. It means the momentum, the bias of the market on a higher time frame is bearish. Say on a weekly, on a daily chart, market will be bearish, right? But you get a bear flag, say on a 1 hour chart, on a 30-minute chart, market tries to correct to the upside before it breaks and continue to the downside.
The downside.
Yeah. So that's a bear flag. So I'm gonna show you now what it looks like on a real market data. Right. This is Euro USD chart. This is Euro USD chart. As you can see from the chart, price created supply here, right? And then rallied away. Remember, definition of supply. Market hits an upper price level and rallies away, or it moves in an impulsive move from that level to the downside. So we've got a clear supply zone created here. This is an H4 chart, right? Then market tumbled. Market moved from bearish to the downside. You can see that. Now, can you see this candle here? This bullish, bearish candle here. Bullish candle, I mean, sorry.
Bullish candle.
This one here. Can you see that candle?
Yeah.
That is a strong demand area. You see how price moved to the upside in a single candle.
Just like you broke up.
Right. Can you see the bullish candle, the strong bullish candle that I've highlighted? This guy here.
Yeah. Yeah.
That's
yeah.
1 hour 4. That's 4 hours of price move in one candle, which took out all these candles here.
Okay.
That means it's a strong area of demand.
Demand. Yeah.
Right. Same applies from the upside. There's this candle here. It took out all this range here in one 4-hour move. That's a clear definition of supply.
Okay.
You see? Impulsive candles, the candles that move fast from the price point, you must be in a position to separate them from those candles which are not moving at all. And when I say candles which are not moving at all, I'm talking of candles like these ones here. See here, these candles.
Okay.
There's no momentum. You see?
Statement.
Yeah. They are like stagnant. They're not moving. And then all of a sudden, one candle which takes them all out. You see? You get one candle which takes them all out of the market, and then price rallied to the downside. Now, when price rallies to the downside, it starts facing resistance on this demand. You see, on this big green candle. For some people who are aggressive traders, they would have taken a long trade from here. You see, all the way to the upside. But the problem with that trade now, the problem with that trade is you would have to hold it. You see, this is a 4-hour. You see, if you count these candles here, that's like 3 days there. And there's no movement. You don't want to trade like that. Can you see? You don't want to trade in that format. So now, price started rallying to the upside. It forms a high here. It went to the downside. It forms a low. It went high again, forms a high, forms a low. And then on the third push, you see, it didn't form a higher high. This high didn't break this high. Then price tumbled out of the channel. Remember the blue lines, trend line resistance and trend line support. Can you see? Right. Let me repeat. Let me repeat. Price was now moving to the upside. Higher highs, lower highs. Higher highs, lower high. Then this high didn't continue up here. Price broke out of the channel. You see, when price broke out of that channel, never looked back. It continued with the down momentum. You see, so that's the trade a person would have taken. You see, that's the type of trades which you should be in a position to take, because you are assured now that, okay, price is not going to come back to the trend line support. Price is broken out, now is going to the downside. And if you look closely on price action from this bear channel, remember we are still on a bear channel, we haven't gone to a bull channel. Bear channel, market is moving in a downtrend on a higher time frame. We've got a bias of bearish. You see? So this move to the upside in the channel is just a correction of the market for the second phase to go to the downside. You can see the first phase is this one here. Market moved here. You see? Then it corrected. You see? The second impulsive. So this second impulsive move is the one which you are assured of the moment you have your analysis on point.
Okay.
You see? So when it breaks out of the bear channel, take note of this candle here. This is a big candle. I remember Paula last week, the size of the body of the candle signifies who's in control of the market. You see that bear candle that broke out of the channel? Look how big it is. Now look what happened next. The bulls didn't even have a chance. Market kept on going to the downside. I hope you can understand what I'm trying to put through. Right. So now let's look at a bull channel. Right. A bull channel is formed during an uptrend, right? It means the bias of the market structure is bullish, right? Normally, after a big rally, the bull channel presents a chance for the market to regroup. That's what I always emphasize, is the market has to breathe before continuing with the upward momentum. Normally, volume diminishes during the market pause and then rapidly expands prior to the continuation. It slowly forms a short-term reversal downtrend. Now, in a bull flag, market forms a downtrend. In a bear flag, market forms an uptrend channel. Bull channels are characterized by lower highs and lower lows. As you can see from the chart, market is moving high. Market is moving in an uptrend here. And then we've got our trend line resistance, the green dotted line to the upside. Then we've got our trend line support, the red dotted to the downside. And in between now, that's our channel. You see? In between, that's our channel. So price is forming a lower high and then lower lows. Lower high, lower low. Lower high, lower low. You see? Now, when price breaks out of the lower high, when it breaks out, this is when you look to open your buy trade in order to get the continuation of this uptrend. You see? This is the bull channel. This is how a bull channel looks like in theory. Now we're going to go to a chart so that you can see how it looks like on a chart. Right. So we've got, I can't remember which chart is this one now, but this should have been, this is gold. Yeah, this is gold. No, this is not gold. This is Euro USD. No, USD card, sorry. So price has been moving to the upside. Momentum is bullish, right? You can clearly see from the lower right of the chart going upwards. Market is in a strong, uptrend. But now, market then paused, then started forming lower low, lower high, lower low, lower high, lower low. Then we've got a lower high here, which the market broke out of the channel. Can you see we've got our trend line resistance here and the trend line support? Can you understand what I'm trying to say, guys? I see you're all scratching your heads there. You're both scratching your heads. Yeah, at first it looks so intimidating, but this time is very easy, guys. It's very easy. So it's just a case of reading what the structure is telling you. So now the moment you see price breaking out of the bull channel, the moment price breaks out of the bull channel, you see here, that's when you open your buy trade in anticipation of the continuation of this first move to the upside, because this price movement in a channel is just a correction in the uptrend. Remember, market cannot just start moving all the way up without correcting. It can't. There has to be like a pause in the price move before another push to the upside. You see? So you have to be in a position to see that in real price action, as in live market data. So the moment you notice that, okay, no, I've drawn my trend line here. Price is now forming lower highs, lower lows, lower highs, lower lows. Now, depending on the time frame that you are trading at, you wait for price to break out to the upside if it's a bull channel. If it's a bear channel, then you wait for market to break to the downside for you to trade now, because you're basically saying, okay, no, the uptrend now in the bull channel is resuming. Market is resuming, going to the upside, and of which,
Upside.
yeah, you see, of which if you look on the chart illustration, yes, market did move all the way to the upside. You see, this is a very nice trade that anyone would have taken. You see? So it's a case of, it's a case of having that ability to identify, okay, market is in a bullish momentum. We are moving high, but market cannot continue all the way going to the upside, 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 upside. It has to correct a bit before it continues with the upward move. So the moment you are in a position to recognize that, then you're like, say, okay, no, now I have to look for these signs in the market. What am I looking for? Let me look for my channel on lower time frames to see, okay, what is the price telling me? You see, do I have a clear channel indication on the chart for me to look out for a breakout so that I take a trade in the continuation of the price? You see, so they are very powerful bull and bear channels, but we only use them when they terminate at an important area of demand or supply. Now, if you have noticed, for instance, on this bull channel, one on the chart right now, you see this green candle?
Yeah.
So this signifies a strong demand area in the market, right? That's a strong demand zone, this green candle. Now, look where the lower low of the trend line support, this low here, where it terminated, exactly 50% of the demand area. And then it came back. You see, for aggressive trader, for someone like me, I would have taken a long trade here to the upside because I'm expecting this candle to hold. The demand at this level here, I expect it to hold. Now, look, the second time price comes back again to this demand area. Look, the second time. Sorry. Let me clear up this a bit. Look, the second time it came back again there. This time it didn't even break the previous low. Market rallied. So for aggressive traders, this is a good area they would have looking for long trades. Now, if we go back to the bear flag, you're gonna see the same thing. Let me just slide back to the bear flag. Right. Now, this is the bear flag, the bear channel. So you decide which one you wanna call it, whether it's a flag or a channel. I don't know which one is gonna be comfortable. Now, if you look at this, you see here, we've got a supply zone here. You see price rallied. 1, 2, 3 bear candles. This is the supply area. Look how market was terminating at that area and pushing to the downside. You see? So those are areas which you are supposed to be in a position to see, okay, I've got my supply zone here, right? So when market comes back to that supply zone, I must be in a position to take a short trade.
Right.
I must be in a position to take that short trade. If you highlight and say, okay, no, this is my demand zone. When price comes back there, you should be so confident. It should be in you as a person to say, no, this is a demand zone on a 4-hour chart. I'm going to take a long trade there. You see, like this demand zone here, that green candle. Look, price came back there and then it rallied to the upside. It was only broken here. When price broke out of the channel, that's when this demand didn't hold. You see, because price kept on going to the downside. You see, but on the first test of that demand zone here, price did reverse to the upside, which is a trade a person would have taken. You get me, huh? So you must be in a position. It's not always a case to say, okay, no, let me look for a bull channel right now because market is moving too too much to the upside. If that price is not at an interesting area on the chart, there's no need to even waste your time looking. But when price is hitting, say, a weekly supply, then you go down to a 4-hour chart, you go down to a 1-hour chart to look for channels. If market is moving in an uptrend, then you look for bull channels. If market is moving in a downtrend, then you look for bear channels, so that you trade in the same direction of the market. So it's gonna take like a bit of practice. See, it takes a bit of practice to be able to highlight channels, but they are very powerful. Imagine you are looking at a channel, right? And say, for instance, you see this. Who was in the lesson last week? Who was there? Paula was there. Paula, can you see this candle here? That bear candle.
Yes.
What do we call that candle?
Which one?
The red one.
Engulfing.
Yeah, the red one there that I've highlighted. I don't know if Dennis, have you watched the video that I uploaded?
That one is a bearish engulfing.
Right. Can you see what happened after?
Ice cream one.
Yeah, that's a bearish engulfing, right?
Yeah.
We had a bearish engulfing when price was hitting the supply zone. The market moved to
Is pushing
the
down.
downside. Now let me go to the bull channel and see if we have another good example here. Where are we? There's no good example on the bear channel. But in most cases, there's no good example here. In most cases now, the moment you see bearish engulfing being formed at a supply zone in a bear channel, the moment you see that bearish engulfing, that's a clear sign market is now gonna push.
That the market is going down.
It's going down
to the downside.
See? Because this bearish engulfing here in the channel, if you had opened a short trade, as in a sell trade, right? If you had opened a sell trade, obviously your stop loss would have been somewhere high here. You see, market never went there. So that means your stop wouldn't have been triggered. And then jump out to the downside. Yeah. So this takes practice, guys. So from now onwards, I'm going to be sending you some homeworks whereby everyone has to reply.
Yes, finally.
I'm going to be sending you some homework almost like on a daily basis. You must also remind me. If I forget, you must remind me to say.
I think that will work.
So that I'll send a blank chart, or I'll say, okay, on this pair, I need you guys to highlight this. You see?
Okay.
Then everyone must send me their answer privately.
No, publicly. So
Yes.
Private, so that you don't go.
So that no one copies.
We went wrong.
So that no one copies someone's answer. You see?
Yeah, okay.
Right. So that's what we're gonna do, because I feel like we are not moving that much, guys. It's like we're stuck, man. Yeah. I need you guys to like get on with it now. That's why I'm like even fast forwarding. If you've seen the notes that I'm giving now, they're like more of an advanced topics, so that you get to see exactly what the market structure looks like and how do we trade those type of structures. So from now on, expect at least some homeworks every day from me, so that people can be involved.
Yes, and we're forced to look at the chart every day.
Exactly. You see, you must have like maybe 20, 30 minutes that you look at the chart, because that's the only way you can improve more time on the chart.
Yes.
So today we've covered the bull and the bear channel. I'm gonna send a homework soon after this. Right?
Okay.
Okay.
But now I need you also guys to decide for me whether we're gonna meet Wednesday or Thursday. Some haven't replied.
Yeah.
Can you hear me?
Yeah, I can
Yes.
hear you, Kaya.
Oh,
Marvelous.
yes, I'm here. I proposed Thursday, so I don't know if who else is available on Thursday.
Okay, I know the date we will see on the channel, so that on the group we'll see what other people say. But yeah,
Okay.
I won't be able. Oh, sorry, I won't be able to come this Friday. It's marvelous.
oh,
I
Marvel,
won't be able to Tuesday. Yeah.
which date are you available?
So which day?
I can only be available this week on
What's
weekend.
good evening?
On
But
week?
it's
When?
fine.
Okay.
I can
all right.
always have
No, I think you see like what we did today, guys. We need to do this more often.
yeah.
For people like Marvelous, Cosmas, and Dennis, they're a bit out of town, so sessions like this, it gets them up to speed.
Yeah.
Because for Marvelous, I really feel like bad because she's missing a lot. So the more we have these Zoom meetings, she can also get up to speed because she missed 2 lessons already. So we must have like a session or maybe 2-3 sessions Monday to Friday, Zoom.
Yeah, these ones do help a lot.
Yeah, so that everyone gets up to speed. So today we covered up the bull and the bear channel and the trend lines. So I'm gonna send a task for you guys in the group a bit later on because now I have to rush somewhere. It's almost time up. 40 minutes is up now. So I'm gonna send a task for you guys, which has got something to do with the trend line and a bull and a bear channel. I'm gonna send a task like before 10. I'll send a task, but everyone has got up until tomorrow
Okay.
to give me an answer.
Okay, I'll probably do it tomorrow.
All right.
Yeah, because I have to give people time. You see, I have to give people time. Unfortunately, guys, we have run out of time now. Our 40-minute mark is up. I hope you learned something, though it was a bit short.
Yeah.
But I'm gonna send you the notes now. I'll send it on the group so that everyone can download and then they can read through properly.
Okay. Yeah, we need to do it more.
Yeah,
Alrighty.
we
Thank
need to
you
do it
so
more
much.
often. Yeah, because that's the only way forward. And you guys, you must
Yeah.
ask questions. Don't be scared to ask questions, guys. You must ask.
Okay.
All right, all right, guys. You must.
Okay. Thanks.
Especially the mentorship group, you feel like you are with these professionals there.
No, that's why I created.
I won't say anything. I'll be quiet.
You see, that's why I created your own group.
We are scared to say
No,
something that
no,
you're not
no.
even confident to.
You mustn't be scared. You've got your own group. You must ask.
By the way,
All right, guys. You
there was
must
a
have a great
question that
evening.
you
Huh?
Thank you.
Okay.
You too.
Thank you.
All right, guys.
Bye.
Bye.
Alright.